So, if you're from my TikTok, then I understand that you know exactly what Homer Mona Lisa was trying to do. Anyway, just a quick recap. Homer Mona Lisa was a man that lived in the 18th century in Japan. He was a rice trader, and unlike most traders, he stood out and observed what was going on because, well, the people that actually move the price significantly are the people that buy more or sell more. So he stood out and tried to observe what was going on. He started taking notes and he started drawing patterns. He realized that these patterns began to reoccur. And so he started naming some particular patterns according to the way they happened and at the timings that they could happen. And he used his patterns in making better trades. So how exactly did he do this, and what patterns did he use, and what are the names for those patterns? That is what we're going to find out in this video. Hello, my name is Eve, and as you may know, I try to make crypto so understandable that a 5-year-old will not have any problem understanding. So if that's what you are interested in, then giving the like button a thumbs up and a subscribe will be good for you. And don't forget to put the notifications on because I do make videos like this every other day. What we have to understand first is that markets need 4 things: buyers, sellers, a place, and a time. But in cryptocurrency, we are more familiar with the 15-minute, 1 hour, 4 hour, 1 day, and the weekly time chart. So this is the time, this, which is this is the place, because you will need a broker, obviously, which will be an exchange. So this is the place, which in this case is an exchange. And obviously you need a buyer and a seller, just so that you may understand. If I'm selling 3 pence and I have 100 people wanting to buy 3 pence, if I say that one of my pence is $10, which means these 3 pence will be $30. Now, if one person comes to buy 1 pen out of the 100 and offers $10 for this pen and knows that there are other 99 people wanting to buy the same pens, he will try to give me $15 just so that he should have a pen. That is how another person will come and want to give me $20 just so that he should have one of these pens. Now, this is how the price of the pens increase in value. Now, let's say that finally 3 people bought these pens. And they say that, but these pens, maybe they don't have any use, maybe they're not writing correctly or something. Or there is some bad thing about the pen that they don't like. And one person that let's say they finally bought the pens for $50 each. So that's $150 that I sold the pens for. Now, let's say these 3 sellers want to sell these pens because they don't see any value in them. And they actually bought the pens for $50 each. But they decide to sell the pens for, one person decides to sell the pens for $30, losing $20. Now you will see that the rest of the other people will want to sell their pens as fast or as soon as possible. In that way, they may decide to sell their pens for $25. That's for the second person, and the third person will want to sell his or hers before it's too late, before it has no value at all, for say $15. Now this is how you start to have a drop in price. So if you factor in cryptocurrency as these pens, then you will understand exactly how price goes up and comes down, particularly when you don't know the true value of what you have. Imagine that these pens were in a box and you don't even know that there are pens in that box. So you are buying something because you think in future this thing will be more expensive. So Homer Mona Lisa's candlestick charts could be used to understand what is actually going on in a market. You see, when I look at candlestick charts, what I see is emotions like fear, greed, uncertainty. These are the emotions that you can see in the market while looking at candlestick charts. And so let's start with the first candlestick, shall we? So you have to know that Homamona user designed candlestick charts to be white and black candles. Black meaning that prices went down, and white meaning that prices went up. I think it was kind of racist, but let's just get on. So, the modern day candlestick time charts, we have the red and the green candles. Let's start with the green, shall we? So we have a candlestick like this. Now, why do they call it a candlestick? Because it looks like a candlestick. Because, well, this actually just looks like a candle, so it's a candlestick. Now, this means that if, let's say we talked about the time frames here. So let's say we are operating on the 15-minute time chart. So this is a market that happened in 15 minutes. So this candlestick starts, the 15-minute starts here and starts to go up. So this candle indicates that prices started here and went up until here. This is the meaning of this candle. Let me break that down a bit. So you have a market. This is the timing. Let's say buyers and sellers came into the market at 1 o'clock here. And there were more buyers than sellers. Or, yeah, there were more buyers than sellers in the market. So prices started to go up. Remember how prices go up in when we're talking about the pens? So prices started to go up. So this starts to go up. And remember, this is where the market starts. The 15 minutes starts here. So 15 minutes here. So you can say 16, 17, 18, 20, and so forth. And so until 30 minutes here. So this is a 15-minute time frame. So let's say buyers continue to buy and no, we don't have enough sellers. And say we reach here and sellers come in. When sellers come in, what we will have from here will be a reduction in price. So, let's say the prices were at, say, $1 here, and we come to $1.15 here, $1.20 here, and here, sellers came in. There were more people trying to sell the same cryptocurrency. What will happen to the price? The price will obviously start to come down because there are more sellers now than buyers. Meaning that more people are willing to sell the same cryptocurrency at lower prices. So the price starts to drop. Now in candlestick time charts, you will see something like this. Now this here indicates that this continued here and dropped down. Just that I will show you this. And drop down there. So this indicates that this continued up until here and dropped down, leaving a wick here. This is one of the reasons why this is called a candlestick, because it is very typical of every market. You cannot just always have buyers. There must be someone selling. So at any given point in time, you have this fight between buyers and sellers trying to buy more or trying to sell more. You can see it as a tug of war. Buyers are fighting to pull the prices up. Sellers are fighting to pull the prices down. So here, buyers are obviously winning because they have this longer body and this little wick. So this part of the candle is called the body, and this is called the wick. So the wick shows us how much of the price has been reduced and how much of the price increased. So by this, we know what the buying pressure is in this particular market in the 15 minutes time frame. I hope everything is understood. If everything is understood up till now, leave a comment down below and say, I understand. This indicates that the price went up here and dropped down. But let's say there are more people willing to buy the same crypto because they heard that maybe Elon Musk wants to adopt the crypto and they want to use it as a method of payment for Tesla. And so more people rush in to buy the same crypto. What will happen to the price? Since there are less sellers and more buyers, the price will continue to go up. And when it goes up, it will swallow the wick. So you will not see any wick here. So here, let's say the price, the candlestick ended here at the 30-minute, after 15 minutes, after the 15 minutes time frame, we had a rush in of buyers pushing the price up till here. Now this means that this candlestick in this market at this particular time frame of 15 minutes, the buyers won the tug of war because they successfully pulled the price up here because more and more people were willing to buy at higher rates because they thought that the price will keep on increasing. And so say some people bought here at $1.30. Some people will buy here at say $1.70 and $1.90 or then maybe $2. So people will keep on willing to buy at higher rates so long as they believe that the price will keep on rising. What they are doing is they are pushing the price of the given cryptocurrency up. So therefore, the dollar value of a given cryptocurrency increases as more and more people are willing to buy that particular cryptocurrency at higher prices. That is how the price increases. Now let's look at a candlestick where the sellers won. Keep this in mind. So in a candlestick where the sellers won, you will have the 15 minutes time frame here. And as we know, the candlestick has to start here. Now, instead of going up, because going up means the price is increasing. As we know, up means price increase, down means price decrease. So, the price is here if the sellers are to win in this our imaginary candle. The candle won't go up, but we will have a red candle going down. Assuming that you understand the previous candle, this is a candle where the sellers won completely. Like the buyers were overshadowed by the sellers. There were more and more people trying to sell their cryptocurrency to exit the market, maybe because they heard that a kid swallowed a Bitcoin. Well, that's just a joke, but maybe they heard some bad news or say some very bad news, and they heard that the government was planning to abolish cryptocurrency, so everyone is trying to sell. And in this candle, the sellers won our tug of war, our imaginary tug of war. So we now notice that this candle only has the body. There is no wick. There is no wick. This wick, there is no wick. So if we see a candlestick chart like this, this we should all understand. This to us means that people came in here, and there were more buyers. So they bought until here. The sellers came in and started selling. Maybe they heard some news or something happened, or they just wanted to take profits, because if you buy here for $1 and here is $2 and you sell, you have made $1. So that's 100% gain. Let's say you bought here when the price of this given cryptocurrency was $1 and you buy for $100. Here, your money will be worth $200. So let's say you intend to take your gains because, well, this is good profit. Because this means that if you invested 100 million here will be 200 million. And that's a lot of money to just leave it. and think that maybe the market will continue going up. So let's say you decide to sell here. So you are exiting the market here. But as more people decide to sell, the price of this given cryptocurrency starts to decrease. So let's say it decreases down to here. And here, maybe the price of this given cryptocurrency is at $1.80. So the person that bought here, if he is to sell here, this person would have made 80 cents. And you that sold here, you would have made $1. Now, so this candle indicates that the prices went up until here, and that is the buyers pushed the price up till here, and the sellers came in and they pushed the price down to here. And then this was the close of the market. Because normally the candle will keep on going up so long as we are still in the 15 minutes time chart. So the candle can go up until we get to 15 minutes. That is where the candle will close. So the candle opens here. This is the open. And in this case, this is the close, because the candle kept on going. And as the sellers were pushing down the price, they were caught up with time. So that is it. So here the buyers are still winning because they have a very big body, indicating that there was more buying pressure here than here. Because here the sellers just pushed down the price to here. But let's say you decide to take your profits and you made $1. This person decides to take his profits, and he made 80 cents. Now, every other person is thinking that the price will keep on going down, the people that did not succeed to sell here. So they start to sell in the next time frame of another 15 minutes. And so as they keep on selling, that is how the price starts to decrease. And it decreases until here, when the prices maybe come back to $1. And buyers again, and maybe you that make $100 here out of $100, which means you have $200 now. You decide to buy again here, not with $100 this time, but with $200, because you got the price again where you bought it when it was here. So you start to buy, you buy, another person, this other person that made $1.80 also buys, and people keep on buying until they are also caught up with time here where the market closes. So in this case, the market closed here. And so every other person here has to go on to the next candle. And so say in this candle, in the next candle, we have a candle now like this. What will this tell us? So, I'm not so fond of the names of these candlesticks and their patterns because, well, they may be confusing sometimes for people who are new. But let us just start naming them so that you can gradually understand. I was not so focused on the names because I want you to understand how price fluctuates or what even moves price. So, let us just call this, as Hama Mona Yusa called it, a doji. So this is a doji. This is a doji. Now we already know what happens before price goes up or goes down. Now in this doji, we can already know what is happening here. We know that, let's just say this is also a 15 minutes time chart. In this market, we are operating within the limits of 15 minutes. So all of this should be in 15 minutes. Good. So here we know that the market opened here and also closed here. So what happened? The wicks, as said earlier, when you see these wicks, it means that this price opened here and maybe went up like this, went up here, and also And the sellers, by going up, we mean that the buyers took the prices up. More and more people were willing to buy at higher rates. And then the sellers came in and pushed the price down to here. By sellers, we mean maybe the people that took the price up, that maybe the guy that bought here for say $1 made some profit around here and started selling. So here, let's say $2. So he started selling and other people started selling until there were more sellers than even buyers, and people kept on selling this particular cryptocurrency until here. So from here to here, and from here to here. So people sold until here, and say we are still in 15 minutes. Let's just say it's been 5 minutes since the market opened, and people sold until here. Now, other people who sold here see that, okay, this will make this stuff too cheap. Let's say it's gone down here and it's 50 cents here. And they initially bought it for $1 and it went to say $2. Yeah, let's just say $2. And here the price now is 50 cents. So he takes $2 to buy, maybe he bought for 100 and got 200, and now it's 50 cents, so he will buy more. So this person rushes to buy the same cryptocurrency, and this person buys the cryptocurrency, and here, somewhere around here, this person sells because maybe he thinks that if it goes up somewhere around here, more and more people will start selling, and maybe he might not get the opportunity to sell as quick, so he decides to sell it here. So there is this indecision, people not wanting to buy or sell here. But when you see a candlestick like this doji, you know that the price must have started here and went down here. Then maybe buyers took the prices from here and pushed it up here, and then sellers came in, pushed the prices down here. So you begin to see some kind of indecision of people fluctuating with the prices of a given candlestick until they are somewhere just hovering around here. This is simply what a doji stands for. So here we can see indecision. We can see uncertainty of price action. So when you see this in any given price, in any given candlestick chart, you know that there is indecision in the market. People are not just buying and keeping to hold for maybe a week. They are buying and being confused of whether they should sell or buy, or sell or buy. So you have this indecision in the market, which makes the price to center somewhere around here. And as the 15 minutes goes to 30 minutes, the price, maybe the candlestick, will end here. And if this ends in a way that you see green here, let's make it clearer. So let's say this is like this so that it does not confuse anybody. Now if this ends in a way that you see green around here, around this indecision candle, then you know that people were still willing to buy at the end of it. Some people were trying to buy at the end of it. Which means in the next candle, if you start to see green in the next candle, then you know that, okay, so after this indecision, the market has made a decision. After the indecision, then comes a decision. People now have seen that, okay, maybe we should actually start buying and keeping for maybe 5, 10, 15, 20, 1 hour, or days or weeks or months. So they start to buy here. If they start to buy, if you see green in the next candle, then you know that the price is most likely to go up. If you see red, obviously you know the price is most likely to go down. However, the price may start with green in the next candle and move up a bit, but some people become skeptical and the price starts to drop, leaving another little wick and dropping down, and the price starts to drop. And so these candlestick patterns are what we should understand what is going on with. So this is a doji. So let's say you see a candlestick like this. So this is a spinning top. This also indicates something that is just as similar to this. Because this indicates that the prices went up, came down, went down, came up. So it's some kind of indecision, but it's showing that buyers are mostly winning in this candle. Now this is showing that neither buyers nor sellers are winning. It is some kind of a draw in our tug of war. So the people pulling from this end and the people pulling from that end are, maybe they have the same strength. So there is not much difference made. But here, there's a bit of difference because buyers are mostly pulling. Buyers are trying to pull the price up. From this candle, we can see that the price must have started from here as the opening for the candle, and then it went up maybe here. That is, the buyers took the price up. People were buying more and more of this cryptocurrency, and then sellers came in, pushed the price down here, maybe even surpassed this place and came down here again, and then buyers stepped in here, bought it at this price, took it back here, and then they kept fluctuating around this area. So this is more like this, only that here the buyers are winning, because here you see that this is the opening. So if it closes here, this is the opening. So if it closes here, then the buyers won. And obviously the opposite for this is this. Here we know that it closed here, because once it shows red, it means that it started here. Once it shows green, it means that it started here. So here the sellers won. Here the buyers won. So here we know that the price is going up. So if you see the spinning top, you know exactly what is going on in the market at this given time. Let's say you wanted to make your decisions based on what you see. How will you do? How will you classify this? You will have to look at what came before this spinning top or what is going to come after. So you cannot just look at it and want to make your decision. You must look at what has been happening before or what happened later. So let's say in this situation, we had the buyers mostly winning here. So the buyers won until here, because the price starts here, and the buyers won until here, and the fluctuation is just between here and here. The sellers have not won, because if the sellers won, then this candle will be red. So you can have another spinning top that looks like this. So in this candle, we know that the price is starting here. Let me put it down just so that you understand. So let's say you have another spinning top like this. So this spinning top indicates that there is indecision in the market, but buyers are mostly winning. This doji here indicates that there is indecision. Neither buyers nor sellers are winning. This indicates that buyers are mostly winning in this indecision. Here, sellers are mostly winning, but it is still indecision because of the length of this body. So the length of the body or the length of the wick gives you information about what is going on in the market. Now, let's say before here we had something like this. We had something like this. This would be a bearish candle, and this candle indicates that sellers are winning. There is no indecision. They know what they are doing. They are winning. So here it means sellers are winning, but buyers came in here and tried to push the price up here. So let's say someone here sold for 180. So let's say someone here sold for 180 here. This person here will be at $2 because the buyers are trying to push the price back up here. More and more people want to buy. So the price rises back to $2, but they were caught up with time, of course. So let's say the 15 minutes caught them here. So the market opened here. The sellers pushed the price right down to $180, but some buyers tried to push the price back up. But in the next candle, let's just put another candle before so that we all are in line. Let's have a bullish candle here. Now, this is a good example of how a candlestick chart may look like. So, here buyers entered, pushed the price right up to say $2, for example, and sellers took the price and tried to push it back down to $180 here. And they were caught up with time, so 15 minutes gone. Now here, sellers pushed the price down to $180, and that's $1.80. And buyers came in, like people like you and I, or institutional investors, took the price back up to maybe $2 around here. Price caught up with them, sellers won. Here, buyers won. Here, sellers won. So the length of the body of this candle tells you who is winning. The length of the wick tells you to what extent the other buyers or sellers were trying to sell the price or buy the price back up or down to. Hope that is not confusing. Here, the buyers bought the given cryptocurrency until the price was $2. Sellers came in or the same buyers decided to sell the cryptocurrency so that they can make some profit. So as more people are trying to sell, the price starts to drop because more and more people want to sell for lower prices. So here they sold until here and it was 15 minutes. So this candle looks like this. So this tells us that the price started here, went up here, came back down here because people were selling. Here, the price started here, went down here, came back up here because people started buying. And here, there was indecision. People were confused on whether to sell or buy, so they kept huddling around here. So this makes us see this doji. So this is a bullish candle, this is a bearish candle, this is a doji, and this is a spinning top. Now this is some kind of example of this, but it indicates that mostly buyers are winning. Here is another example of this, but it indicates that mostly sellers are winning. So in this, we understand now that the price of our chart is going down, the general price. So this is 15 minutes, 15 minutes, 15 minutes, 15 minutes. So this is 1 hour. This is 1 hour. So in this 1 hour, there was increase in price, a drop, a decrease in price, a little increase, and indecision. Another indecision, but in this indecision, we had mostly buyers winning because some buyers were still buying in this indecision. So we got buyers winning in this candle. This gives it a spinning top shape. Here we also had indecision, but we had mostly sellers in this indecision, so the price dropped. So here it started at $1 and maybe it went to 80 cents. So this is telling us something. If you understand this, it will give you an advantage, because if you look at this and you see that, oh, this is a bearish candle, means that prices will most likely go down. But here we come and we have indecision. Here we have a bit of a bullish pattern, but people are somewhat confused. I wouldn't invest here. I will wait until I see a clear sign that prices will rise. But my investment will show that I am investing somewhere around the bottom. You might be like, why am I not just naming the various types of candlesticks and types of writing down types of candlesticks and their names so that you memorize them? Because I want you to understand the movement of candlesticks, not their names. If you understand the movement, you will be able to know what exactly is happening in any candlestick given its pattern, and you will be able to tell what can happen later. For example, if we see a candlestick like this, we know that the market, because markets start at timing, so in this market it opened here. In this market, the market opened here. Now, if we see this kind of long wick, we know that the sellers are the only ones that can take the price from here where it opened down to here. So if the sellers took the price like that down here, but the buyers came in here. The buyers came in when they saw that the price was so low here, and they kept on buying until the price reached here. Now the buyers did not stop there. They continued until the price reached here. So the buyers started from here and they bought until here. That is why we have this long wick, and that is why we have this body up here, ending here. Now this, to all of us, looks like some kind of hammer. It looks like a hammer. So since we all agree that this looks like a hammer, the other people have decided to call it a bullish hammer. So it's basically a hammer that is bullish, because we said that if the price is continuously moving here and closes here, it means that the buyers are clearly winning, because the sellers tried to sell the price to sell this particular cryptocurrency until they reached here, and we had a lot of buying pressure that rushed in, got the cryptocurrency from here, and they kept on buying until here when maybe they got caught up with time. And so this candlestick tells us that the next candlestick is most likely to be bullish. So this is a bullish candle, and when you see this, it may be a very good opportunity to buy. So maybe you're looking for that favorite cryptocurrency that you've been hearing about, and you go in its charts, and maybe you made it somewhere here. You know that the next candle has to be bullish. Now, given that everything stays the same, no bad news, nothing, the next candlestick has to be bullish, maybe like this. Now, this is just to indicate that maybe the sellers came in here and tried to sell it a bit, or people that bought it from here or bought from here are taking all of these profits, because from here to here, that will be the profit that they are taking if they sell here. So some people might decide to sell a bit of it here, but overall, this is still a bullish candle. This will remain a bullish candle. Now, this means that some people may continue to buy because they feel left out. That maybe they did not buy here and they still did not buy here, so they still want to continue buying. And so maybe we get some other candle here like this. So here the buyers are still winning, but the price is not really fluctuating that much. It's not really moving that much. So here we have buyers that are winning, and maybe the price may start coming down from here, or it can still go up. But this is not a good indication of upward movement of price. So you will have to wait for the next candle to tell you where the price is going to go after this indecision. Mostly buyers are winning in this indecision, but they may lose in the next candle. And so in the next candle, you may see something like this. Let's say you see something like this. Now, this is opposite to this, because this was a hammer, and this is an opposite hammer, an inverse hammer. And so this is an inverted hammer. So here, this tells us that the market started here. The buyers pushed the price up to here, and the sellers came in and pushed the price down here. So this tells us that this will not be a good point to buy, because we may see what happened here in the negative. So here, let's say you see something like this. Now this will mean to us that this is a bearish candle, where the sellers sell down to here. Some buyers come in and try to buy up till here, but there are more sellers. So the market closes somewhere here and the sellers are winning. So this tells us that there's a lot of selling pressure in the market right now. So this is not a good time to buy. But in the next candle, we don't see a spinning top. Let's say we see something like this. This, my friends, will mean this is a doji. We discussed what a doji is before. And this will mean that there is indecision. These sellers that were selling here don't feel confident enough to be selling. Maybe they have heard that Amazon is trying to adopt the cryptocurrency that they are selling. And so if anyone is holding that cryptocurrency, I do not think the person will want to sell it, because he knows that the price will increase soon. So here, we know that the price started and came down here. More buyers rushed in, pushed the price up to here, and formed this hammer shape. So this is a hammer candle. This is a bullish hammer candle. And so this indicates that the next candle has to be bullish, provided that everything stays the same. So that is exactly what we see here. The price increases here, and some sellers step in, or some people start to take profits, because say some people that bought here take these profits here and maybe sell down to here. But some people still hope that, well, the price will still increase, so they hodl on. Hodl. This means holding onto your cryptocurrency for some time, maybe a day, maybe a month, maybe a year. It means hodl. So they hodl on to this next candle. They hodl on to this candle and say there is a bit of indecision here, but the buyers are winning. But after this, we have a sudden drop in price. This is a very bearish candle, and it's inverse to this. This is inverse to this. And so this indicates that there is a lot of selling pressure in the market. So we know that if everything stays the same, like if there is no striking good news, the price has to go down. And that's exactly what happens here. The market opens here, this candle opens here, gives a large body, indicating that there is a lot of selling pressure in the market, and closes here. And so this tells us that there were some buyers that tried to buy this dip, because this is a dip, like a dip in price. A dip in price. So some buyers try to buy it up to here, but the market closes. So this still indicates that the market is still being bearish, like there are more sellers selling, there are more people who want to sell. But here we have indecision, where the sellers are kind of winning, but not as winning as in this candle. And so this is not a spinning top. This is just a doji that is red, which means that the sellers are winning, but they are not as winning as in a spinning top. Because if this was a spinning top like this only tells us, this only continues to tell us that there is a likelihood of the price to continue going down more than in this. So if you are to base your decision on the fact that which one of this will tell you that the price will go down more, it should be this, because the price starts here and ends here. Here the price starts here and only ends here. So we don't see a lot of selling pressure. This indicates more selling pressure than this. And so let's say in a situation where you had another candle like this. Now this, my friends, is a dragonfly doji. This indicates strong buying pressure, even though this looks red. Let me put it here, maybe you can see it well. So even though this looks red, it indicates strong buying pressure, because this means that the market started here, came down until here, and the buyers bought all of this until here, though they did not manage to cross above to give us a green candle. They ended somewhere here below where the market started. So it is a red candle, but it indicates the longer the wick, the more pressure that candle is trying to show. So this is more of an indication that the prices will go up than this spinning top. This is like a smaller version of this. This dragonfly candle is a smaller version of a hammer candle. So this, we know that if everything stays the same, we will have some kind of pressure building up here from the buyers that were buying up here. So we'll probably have a candle like this. And you can also get it inversely like this. And this will be a gravestone doji. This will be a gravestone doji, even though it looks green, because the buyers bought all of this because the market started here. The buyers continued to buy this cryptocurrency until it was here. The sellers stepped in, sold, or the people that were buying started to sell until the candle got here. But it did not manage to cross here to give us a red candle. Here, it did not manage to cross. So we were stuck with a gravestone doji. What I'm trying to do here is make you understand how price is being reflected on candlesticks, how you can use candlesticks to read the price action that is going on in the market. That is what the buyers and sellers are actively doing. And so by understanding this, you can be able to make some sort of prediction as to what will happen next. You know, if you see a market whereby buyers are mostly winning, you know that the price is most likely to go up. But there could be some sort of correction somewhere whereby buyers are profiting because price is going up, may decide to start selling. So it's not like some group of people come into the market and decide to sell. No, the same people that are buying may decide to start selling. And so this information is reflected on candlesticks. So what I'm trying to do is make you understand how to read these candlesticks, not to memorize their names, but how to read them, how to interpret them, and know exactly what is going on in the markets. So in our next lesson, we will be looking at how two or more candlesticks can mean something totally different. For example, if we're having a bullish candlestick like this one, and the next candle after this is a bearish spinning top like this, this forms a pattern which we'll call a bearish engulfing pattern. So in our next lesson, we will be looking at patterns that candlesticks will form when they combine together. If you look at this alone, you will think that, okay, in the subsequent candles, you will have maybe another bullish candle going up somewhere here. But if you do not see this and say you see this, this will mean that the price will go down. So this will give you a sign that you will have a sudden decrease in price, and this is a very powerful indicator. So in our next lesson, we'll be looking at the patterns that candlesticks form when they are joined together and what indicators we can use to know these patterns. Don't forget to subscribe and like the video if you did understand it, because here I'm trying to make you understand candlesticks, understand price action behind candlesticks, not necessarily knowing their names, but understanding what exactly is going on when you see a candlestick like this. So don't forget to subscribe and like the video. If you did enjoy it, or if you have any questions, let me know down below. And for you, my good people from TikTok, let me know down below. Just comment TikTok so that I know who is from TikTok and who randomly found my video. If you have some questions, let me know down below. You can also send me a message on Instagram if you have some private questions or whatever. So basically, this is how candlesticks are, and here we are just understanding what is actually happening when you see an increase or decrease in price action. What candles will represent this price action. So see you in the next video. Stay safe.